My name is Gigi and I trade US 30. So today we're going to be talking about daily trends, how to choose a TP, and market maker levels. All right, first thing we're going to talk about is the levels. Now, dealing with the levels, you have the peak formation and then you have three levels of either drop or rise over a period of 2 to 3 days. So this is US 30 and it had a full market maker cycle for the past couple of days, and then this day is Friday where it made a peak formation low. All right, so this is the peak formation high, and this happened on Monday. So after the session closed, we saw a close of about 250 pips or points, 282 points. So we automatically know that this is in AFP, which is trading away from peak. You can identify a peak formation because they look like a mountain. It can be upside down or it can be just a regular mountain. Price shoots up, then shoots back down, or price shoots down and shoots back up. So Monday we had a peak formation. Then Tuesday, price pulls back slightly. Level one, price doesn't normally pull back that heavy because the market makers have to really get out of there. So you see how this price really shot down at level one on Tuesday. So it went for about 670 points. All right. And then it pulled back slightly because there are always going to be pullbacks because it's like a step stair. So then right here on Wednesday, price pulled back exactly to the EMAs at market open, I believe. Oh no, this is at 2 o'clock. But price pulled back because this is level two. So in level two, the market makers step aside and the retail traders trade. So you can see all this choppy price action in level two, and then it finally dropped. So if you don't mind the consolidation of level two, then feel free trade level two. I don't care for level two. And then level three comes, you have a bigger pullback, and then finally a drop. So this whole cycle consists of about, I'm gonna guess, 1,000 pips. This was 1,300 pips. So if you learn the market make a cycle, after the peak, you could have held this for the 3 cycles. But sometimes cycles come in 2 days and not 3 days. So now that the cycle is done, we have a peak formation low right here, and then it closed about 650 pips to the upside, and it went about 700 pips. So we know that this is a new level because this price broke this zone flip. So where price bends and turns, those are called zone flips. So this price from this day broke this level. It surpassed price from the previous day. So we know this is a level. So this right here is a peak. So for Monday, we're looking for a slight pullback and then continuation up. So those are the market maker levels. How to choose a TP. So in market maker, we have something called ADR. ADR is the range of how much a pair moves generally in a day. So US 30, let's count these levels. Day one, it moved about 650 points. So for day two, I would expect for it to, or level two, I would expect for it to move around the same amount. So 500. And then let's see how much for level three, how much it moved. Yeah, so about 500. So you can expect for US 30 to move around 520 points per day, because that's what the ADR is. So when I trade, I put my TPs at the ADR high or low, depending on if I'm going short or long. Is really no need to go beyond that because it's not likely that a pair will go past its ADR. It's average daily range. So I normally put my TPs right there just to be safe. And with trading with US 30, you really don't need to try to stretch it because it already has a lot of volatility. All right, so I think that wraps everything up for today. Thank you for listening and see you next time.